All right, gang. Welcome to Forward Focus. It is February 21st. I have not totally flipped over to my new system yet here. So we are on my regular teaching computer for the moment. But like I talked about last week, we will get you flipped over so that we will have the bigger monitor for you coming up here shortly. So today we are going to take a look at what is going on here in the overall market. And this week in League of Traders, we've been talking about trend development. So of course, this is always a huge topic for us on Fridays because that is like the main theme of, hey, what's going on here in the market? It has to come down with what's happening on the larger trends. So let's flip on over here to some charts. We're going to take a look at a lot of your guys' individual stocks here today. That is something we didn't get to last week, so we're going to look at that in greater detail today. So if there's something you want me to take a look at, please post it under questions, and I will pull that up here shortly. All right, guys, let's switch on over here to the charts. I'm going to close up some of my other programs in the background here as we are going, so we should be good to go here. We are going to look at the overall indices first, and then we will flip over into stock territory, and we get time, we'll go back into some of the other futures contracts, maybe bonds, maybe some forex, whatever you guys want to take a look at. So I'm going to pull up the Nasdaq here, and we're going to look at some of the larger time frames quick. And of course, our monthly time frame, we've been seeing this kind of blow off top going on here. It's a little bit difficult to get into the details of this when we're looking at just the monthly time frame, but it's a pretty extreme move. Momentum is picked up here on the second wave to the upside. So it's kind of like a really steep 2T type of pattern that we've got trying to develop here, where we have a 1, 2, 3. Kind of that little time correction pivot in here following the V, and it's picked up and it's gone past the 100% extension with that stronger momentum. So this tends to be harder to turn around as easily. Usually we'll see things, start to slow where we can get kind of more overlap like that as it's coming up here. When it does try to turn around, things like a shallow avalanche can be more common. Let's go drop down to a smaller time frame. So here is our weekly. Not a lot of difference here. Let me put that extension on here so you can just see what we've been watching. So here's the first main extension. We're basically coming up to the 123.6 almost exactly here. I don't have this like snap mode here, but it's almost exactly the 123.6% extension. And we can kind of see more of the waves that are taking place in here as it's pulled up to this level. In particular, we have a 1, 2, 3 move in here, kind of coming off of that little Phoenix zone here. And then this is traditionally the widening up level. So we're still seeing pretty strong momentum as this has gone up and pushed for a third move to the upside. Not quite a measured move yet, and don't know that we'll actually get a measured move before we get more of the back and forth type of action coming in here. We're basically at a point where I'm down on smaller time frames, have been for a while, because once we get up to these levels, you're basically looking at the smaller setups for looking for continuations with that trend and the smaller setups for looking for reversals and corrections of that trend. We don't have patterns that are forming here on the weekly time frame right now. We've got an exhausted impulse move that is similar to some of the much larger impulse moves that we've had over the last couple of years. So it's at a zone where it gets to be a little bit trickier for those that are looking for like multiple week type of holds, because you're at levels where, yeah, we can get continuations, but we could also get really sharp pullbacks and flush type of moves. And that's what we're seeing here again over the last couple of days. We talked about this yesterday in League of Traders, where we had that first main downside day again, and it was kind of at some of the extremes for that first flush day in the past. But a lot of them will have gone 2 days and then still managed to bounce up. The thing is, we've had 2 of those in a row already so far. So trying to get as much of a bounce the 3rd time in a row, probably not going to happen. Usually what we'll see is that if something happens twice in a row, where we've got a technical strategy twice in a row, here and here, when it does it the 3rd time, there's usually going to be differences. So that difference can mean it can get a deeper pullback. It could go into more of a trading range, do like a shallow avalanche. It might go and, chop slower to the upside. I'm kind of leaning towards this trying to do a deeper pullback right now, because both of these previous corrections have been pretty good price corrections with that initial swing and then the continuation up. And now, since this has gone on for a 3rd move and the second one was bigger than that, and yet even though momentum picked up trying to do that 3rd move, it shifted here. Whereas if this was going to do the 3rd stronger move, like this, slower, faster, extreme, it should have had more like a kneecap and then just immediately followed through, and it didn't. So the fact that that didn't happen leads me into feeling that this is going to try to do some more price correction as we go into next week. Don't really see a huge setup for it quite yet on this time frame right now, because we can't see any sort of smaller base here. But let's go down to look at like the 240-minute time frame. So here, what we're seeing is that comparison to that previous move. And what we were talking about yesterday in League of Traders, actually I need to go down even smaller, because we were looking at that kind of sharp drop yesterday. I'm going to go, I think, a 30-minute. So we were looking at that sharp drop yesterday, basically coming off a momentum reversal plus. You can see that kind of here on this time frame, where here's like the momentum reversal type of zone, and then it went to that plus portion up here. And so what we were looking at yesterday was, this started with a first initial wave down, more extreme second wave down. So usually what we'll get is we'll get a 3rd move, and then it can try to do another correction. When it did that 3rd, it kind of had like this 2-wave move, but it didn't make it to the lower low. So our time development for our corrections were there, but it didn't make it to that lower low. And instead, it went a little bit later. This is what I was looking at in overnight trade here, because I was looking at that potential for that to happen a little bit earlier. Obviously, it didn't take place until overnight. The time correction, though, aspect is really important. So you've got this time correction here and this time correction here. And then what we talked about yesterday was, oftentimes the way this will play out is it'll have that slower start. A lot of times that's 2 waves. We didn't have that here. It'll have a stronger move, usually like a 1, 2, 3. It'll come back up again, similar time correction here, and then it will have like a 2B and then pop back up. So this is that portion that we were talking about in class yesterday. It's just that it didn't make it to that lower low, and it popped up here, and what we've got going on the larger time frames kind of took over again. So it did a 2-wave move up, shifted momentum again, and then we're bringing this lower here. But I wouldn't consider this part here to be the 3rd wave, because the trend development is different, the time development. So this is kind of its own longer correction now at this point, and that's leading to the current move. And when we go down even smaller, might have to look at like a 20,000 tick chart to kind of start to see some of the more details in here. Maybe 8,000. What we're seeing is we're not at a place where we've got like the strongest reversal trying to form. It's trying to do that that two-wave move now, but on a bigger scale. So we saw it overnight here. This is the one that we saw on the time development chart. And then it's trying to do the bigger one here, but our time development there to there is totally different. So what that can mean is that since this momentum is still pretty strong, we do have the possibility this can go out to about here and do another leg down. And that would go along with what we were talking about on the daily time frame, where it can have more price correction compared to what we saw with the last two corrections. So that would be the strategy that would be most likely to try to develop that, because this is starting out here as a price correction. So if this can go into more of a time correction, now I don't really want to see it do a huge megaphone, which it's okay to start with here, because even though it's kind of forming a megaphone type of formation here, even if it pulls in here, it still has room to go into more of a flatter base here. So it could do like a little bit of this megaphone to start with and then go into more of that time correction. I wouldn't want to see it to do a full megaphone here like that to do it. That wouldn't be as ideal. I would rather have it go and kind of go into like another two-wave in here to get that going. That's just going to be a stronger setup for this. So this is the predominant pattern that I'm watching for as we go into the weekend and into early next week. That's the main one that I think is the highest probability of trying to form at this point. The slightly lower low here is a con, but since it's so close together, given this time development here, it's basically essentially the same distance as these lows. So to me, it's kind of a double tap type of bottom or type of top. You can see other examples of them in here. So it's not an extreme difference. So it doesn't bother me as much. It's a con, just not as big of a con as it could be. Also, it's not as huge of a con because of the fact that this is slower, this is faster. And so this is kind of our wave 3 there. It's a little bit stunted for the wave 3, but it's basically what's going on here. All right, let's take a look at the S&P 500 now. It's going to be pretty similar, but I know we've got some spider traders here. So what we've got here is you can see that kind of like little third wave a little bit better on the S&P 500. We've got, here's the failed momentum reversal because it doesn't have that parallel channel. So then it goes into, this is basically our two-wave correction, even though we saw the slightly higher high here. We talked about that yesterday. And then here's the plus portion. So we've got our momentum reversal plus, and then we had that really strong downside move again. And so here's where it tried to go again on the 8,000 tick chart, ended up going out longer. So we've got the two-wave move down here. This is now going into correction. So what we'd like to see is about the same amount of time development again to try to get more downside coming in. So that's, again, same thing I'm watching for as we saw on the Nasdaq. There's not a whole lot of difference here. When I'm looking at the ES, I tend to look at 8,000 and 3,000 tick charts for timing just because the patterns are cleaner on there. So you can see really clearly the comparable time corrections that are taking place on this. That's really useful when you're looking at patterns that can happen on the ES, where when you go down to smaller time frames, like a 500 tick, it's not as clean. You've got some messier action. It's a little bit worse for like return compared to what you're risking. You've got shifts here, but to me, this shift was cleaner on the Nasdaq when it happened. And actually, it was a really good one on oil. Happened a little bit earlier, but it was the same idea. Let me show you that because that was one of my few trades on oil today. But it's the same idea. It's that shift in the momentum at the support. Just going to grab this from another chart here. So you can see it right here. This is the same type of thing that we're looking at. And so that usually gives us a nice continuation. We can see that continuation here on the ES. It did a great measured move on the ES, which allowed it to do this third move here. Now, if you were following along with me in League of Traders, we were looking at this time development really closely. So when it did that same amount of time, if it was going to do that third little kind of push, that's where it would have done it, just like here with the similar time development here, kind of had the shorter one and then the longer one, shorter one and then the longer one. That's where it would have happened. There's a little bit more of a shift though at that high there. It's a little bit here, but it's kind of that measured move. So that's what I was looking at there. And then it didn't go there. So the next time development for it to try to go was right here. And let me kind of widen this up. So you'll see, for those of you that are in the room, that this is the next point at which that can try to go, because that is twice the distance of this. So here's your first zone that it would need to go. Here's the second. It doesn't go there. We still have it holding the channel. And then here's the third. So when it comes into the third, that's where we see that holding. So we've been talking about time development as basically being fractal in nature in League of Traders this week. So what we have is, if this is 30 minutes, it goes and bases out another 30 minutes the next correction, but it doesn't go at that 30-minute point. Then the next time it's going to go is more at that 60-minute. If it doesn't go there, then it's more likely to go at the 120-minute. So if you think of things like that, then that can help you with a lot of the timing on basically everything you're trading. So we've seen a lot of this where things didn't quite go at the first point and then they went at the second point. So even here on gold on the way down, we've got a couple of versions here. We were looking at this as measured move support, but what was going on in the larger time frame was really interesting because we already have pretty much an extended move on the larger time frame. Let me kind of back that way up here. So here's gold. This is the 20,000 tick chart on gold. So we've got that Phoenix, we've got a 1, 2, 3, kind of a bigger correction, trying to do that second portion of the 1, 2, 3. So it's getting a little bit exhausted up here on gold, which means that even though we had a nice two-wave correction here, I treated that as just a scalp type of bounce because of that larger time frame, and these moves were just still pretty strong. I mean, the second wave is a little bit stronger than the first one. And so when we look at the time development on it, here's the same thing that I was just talking about on oil. You can see where it kind of went out even further and did that next move. So when we're looking at oil, or gold rather here, we got a nice initial bounce, but then it went into that range. So here's the typical, hey, if it was going to do a Phoenix, it would go there. It didn't go there. So you can see that negative, and then it went twice as long. So here's that first negative zone, and then there's that twice as long zone. So that's the next zone that you can get a bounce at. Notice it held that pretty darn perfectly, just like we saw on oil. So here's that bounce. And then we go and double that out again, and we get the breakdown zone on gold. So we actually get the confirmation for this move. And this gives you an idea that, hey, this is too early here. Because if we look at that congestion and the first attempt to break down, we go and double it out. The second attempt is really right here. This is where you want that confirmation. So try to go too early, pulls back up, and actually offers a better opportunity for a short at that point. So this is where people will get trapped on breakdowns too early. Sometimes you will see them go at that point, but the risk is much, much higher. So this is just kind of a little bit of a brief wrap up of what we've been dealing with here in League of Traders this week. Obviously, a short version of it. Right now, we're at the 76.4% extension on oil, and that's kind of holding here. So yeah, this is like basically what we're dealing with right now. Overall market, this is possibly going into a megaphone here. Got it kind of starting to widen up here. But like I said, I'd rather have it, if this goes into a megaphone, just like on what I talked about on the Nasdaq, if it goes into that, comes back into here, then I would like to see it hold like this so that the overall range ends up playing out like that. And so far, pretty decent possibility for that. It's holding it pretty well here. So let's go take a look at some of the other markets. What do you guys want me to look at here today? We've got STNE, a Shake Shack. We're going to be delving into gaps here next week in League of Traders. This is a beautiful breakaway type of gap, you guys. This is the type I love to play in the direction of the trend in the morning, like right out of the gate. So we'll be talking about things like this next week. So we've got STNE. Oops, type properly. This is a trickier one here to trade as a short-term trader just because it's such a choppier type of thing. It's more like an investment type of security. When we're looking at kind of the trends development here, we've got the movements in there, but it's just a choppier situation. So here's our pullback, here's our two waves up, here's our two-wave correction, here's our two-wave continuation, and the two-wave continuation has kind of shifted momentum. So that's what I'm seeing when I'm looking at the trends development. We've also got the first two waves down here where this is a little bit faster, so it kind of shifts momentum just like we saw in oil and gold at the lows. We actually had that happening again at 11:47 on gold on just like a smaller time frame. I'm gonna throw that one back up here again. This is kind of a really beautiful little 50 tick setup. See this lovely little 2B here? Look at where it's holding in that bigger channel, and then it goes right into this Phoenix. So nice little trend move here. So this is the kind of shift that we're looking at that's happening over here. It's just that this wasn't as extreme with those two waves down as this one was. So when your moves are really extreme and then it goes into your shift in momentum, the more extreme the move, the more subtle that momentum shift can be. It's a little bit stronger here. So back to what we're looking at on STNE here. By the way, we kind of have the opposite thing happening on the S&P right now too. I know some of you guys are still trading right now, so I'm just gonna post that fast. You can kind of see it here on the 15-second, but it's a little bit clearer here. See that shift there? That's what's kind of pulling this back down in here. Okay, STNE, we're gonna look at the larger time frame now. So you can see we're at a zone where we have that potential for exhaustion on the daily time frame, but on the weekly and monthly, let's see what we've got. It's kind of tricky because, again, this is another one where we don't have a lot of extreme back data on here to really make as easy comparisons, but here you can see that two-wave shift a little bit, and we're right at that previous high. I will say though, I've seen a lot of situations like this where it goes all the way up and back with a really steep move, comes back up. It's made it about 2/3 of the way back up, right? So a lot of times this will actually push to a higher high. It's trickier because we already have two waves coming out of this and that channel has shifted, so it makes the flushes easier. But I'll still see situations where this will go and offer a continuation with a third move. So even though this is traditionally a short setup here, because of this being kind of a newer security over here as far as the release goes, there's that potential that that time development can go out here again and we could still get another move up. So I'm not as convinced that this is really going to offer a pullback. If this was at a really clear trend channel high, then yeah, this would be a great short opportunity because you've got that really pretty little move in here with the wave count and everything. But being a newer security, you almost have to treat it like it's something that's coming off of the ground. So those can have a better chance of trying to get going. So if you're long this on an investment, I really wouldn't worry about this too much right now. I wouldn't even get too concerned unless it doesn't go by here. So you're looking at about like going into late spring, I guess, is how long it could take before it could do another continuation on there. LVS. Oops, I missed a letter in there. Ah, I swear I can type, really. Not nearly as good as I used to. Okay, so Las Vegas Sands, we got like a 2A trying to do an avalanche on the weekly. Let's see the monthly. Monthly time frame is not as great for an avalanche, but it can still turn over. So what we're seeing here is that, this came off again at 2/3 retracement back to highs, right? But if it's going to offer continuation, ideally we would have seen the upside try to pick up, some slower downside that can offer the next continuation, and we're just not getting that momentum confirmation. We've actually got momentum trying to shift over. So what can happen with this type of situation here, especially since the second move up is a bit slower, this can even go and turn into a move that heads back even lower again. So we saw this happening on gold earlier. Gold did kind of that same thing when I showed you where, we were looking at the time development and it just couldn't get going for a Phoenix. So it's kind of trying to do that. So this is like kind of forming a little bit of a short setup here on the monthly time frame. It's not the ideal placement because, hello, we're right at 50% on the way back up. But if I was going to take a direction, that channel breaks there, that's what I would be looking for. And I would want the time development to be, pretty evenly spaced between those coming down. And then, like I said, that could go and even pull this back down. So you really have to watch the subtle momentum shifts that are going to be happening right here now. Oil's doing a good job holding that 76.4% we were looking at earlier. On the daily chart of LVS, again, we've got that bull trap here, right here. And in this case, notice that it's right at that measured impulse wave after this did that Phoenix. It did kind of a slower 1, 2, 3. So this is one that you'll get more of the swing trades. Usually what I look for is here as a minimum target, and then just depending upon how the momentum goes, this whole zone is my target zone. So it picked up momentum pretty well in here. So right now I'm looking at this to try to pull back into that zone again. And this is so extreme that if it tries to go an avalanche there, it might shift. It might have a harder time really following through as easily. But right now the bears are definitely taking the lead on this one. Really nice pattern to get an even steeper downside move is instead of trying to go into an avalanche, if this did manage to pull back up here again and do a gap closure, that would create a 2T, which would allow this to fall again much, much easier. So even though the bears are kind of taking the lead here still, if it can manage to do that next wave up, that would be an awesome short zone right around 75. So I would keep an eye on this for swing trades, especially if that starts to happen. LVS has always been a pretty good swing trading stock for me. I used to trade it a lot more than I have lately, but you can see that when it breaks, it has pretty nice solid moves. There's a little bit of overlap, but the directional trend holds really well. You can see that with the megaphone here. You can see it even with, you know, the shallow avalanche up here, the tilted continuation, two-way correction with the momentum shift. So it's a pretty good one for swing traders. And it has been for as far back as I can remember. A lot of stocks will kind of come in and out of favor. You know, they'll be really good for a while and then they'll kind of like not, and they might not ever come back into favor again. But LVS has been one that has just been consistently a good swing trading stock. Roku, oh, it's gone past like the point to try to do another move on the upside. Monthly, not really easy to see this. Weekly, a lot of times what happens with these is they'll go like that and then they'll offer a really rapid fall down again, and then they can try to correct again, come back up, but it could just keep going like that. It's not something where I really see a good setup here. Daily chart again. A little base like that could lead this to another stronger downside move, so you get that kind of two-wave move down again. And that measured move would be the next support level. It should probably be about here. This volume here is really interesting because it's actually favoring the bears the way this is formed. So despite this pop up here, the overall volume going into that pop was more bearish. So that makes me think that this can have another move down here. See the, you know, actually 30-second on Nasdaq is almost doing the same thing. Let me show you that, so you can kind of get a feel for what I'm talking about. So this zone here, and then this kind of move in here, and then we get the two waves there, even though it popped up right here. That's kind of what I'm thinking as far as this trying to pull down again. And then you can see the Nasdaq went and pulled even further. But this is the concept that came to mind when I was seeing what was happening here on Roku. I just happened to notice, hey, it kind of did the same thing here just a second ago on Nasdaq too. We saw that on oil a couple of days ago also. I talked about in League of Traders. I don't remember what day it is, so I'm not going to try to waste time here going back to find it. But for those of you who are watching the League of Trader logs from this past week, you'll probably come across that in the discussion. Let's see, we've got TWLO, and then we'll look at NZD-JPY. So this is the good three-wave move, nice technical performance here. This did happen to have a megaphone going into the third leg of downside. I don't like these as well, but it helps that the highs were closer together, so the megaphone was kind of more tilted. So what I don't like with these, as we talked about this week with trend development, is that I prefer that the second correction that leads to the third leg down is not a megaphone, unless it goes out further. So it can be a megaphone like here in the chart and then go into a two wave and then go break down. So it kind of did that, but not perfect. So this is an example of where that still worked out, but again, higher odds of failure. Now, distances between lows here is really good for this Phoenix here. Even though the Phoenix isn't the prettiest looking Phoenix, the volume is great for it, helps pull us back up. And it goes and does that extra little push like I was showing you guys. We were watching on oil this morning. So oil didn't do it. It had a little bit more of a shift in momentum here and then went into bigger correction, but that's that extra little push up here. And now it's kind of iffier again. So we don't have a really strong 1, 2, 3 move, which makes it harder for this to go and develop a stronger continuation over here. It's usually going to go into more of a choppier zone. We are at the same time correction as a do or die point. It just doesn't have the best base for it to offer that continuation again. So let's go up a larger time frame and see what's going on over there. So the way this is kind of shifting, it still leaves open the possibility that it could pull back down to the lower end of the channel because it came up more than 50%. It didn't come up in a steady trend, which would allow for a more steady correction, which would allow for another wave up easier. That would be more conducive to a continuation. That's just not happening here. So with this extra shift here, it makes it easier to pull back into this zone of lows. And that would be a support zone because it pulled up more than 50%. So it might not come back and totally retest that low before it tries to bounce again, but that would be the biggest risk factor that I think we've got going on here for the bulls, especially the momentum shifting over here before it came into the correction. Bulls just had another fighting chance because nice three-wave trend development, average momentum, shift in that momentum with the Phoenix, but it is not performing well here like it should be for the bulls. Monthly is really strong, bullish, but again, the shorter time frame is just not as easily confirmed. So you've got that nice 1, 2, 3 here, pull back. A lot of times we will see that pop back up, but we would want more of that better base in there. It's just not doing it. So I think if I was going to go on the long side with like a new setup, I'd be a lot more cautious because I would be concerned that even if it managed to pop up to a higher high here, grab my pen, even if it tried to pop up here, it could just do a 2T and pull back again. That oil's finally trying to go for that 100% extension, just doing it a little bit more slowly. On the Kiwi yen, this is not a pair I look at very often, but that's a pretty decent avalanche trying to form there. It's a little bit short still. You can see here's our little Phoenix over here. Here's a previous correction. Here's a previous little correction. So it's kind of closer to this shorter one right here. With the two-wave move down, ideally, I'd like that to go out to about here before we get that China breakdown, which would be more comparable to this one. So I would like it to go out a little bit further. So if we treat this as 1 and 2, then basically double that would give us that next zone that would be good for another correction. So breakdown right here, a little bit early. I think that there would be a greater failure rate if it tries to go immediately. Monthly is good for it. You can see the first main move down here. There's still room for this to come in this congestion better. That's a nice zone of congestion. It's about the same as it was over here. We kind of have this like in inverse is what's happening on that smaller time frame. Weekly is looking good for another move down because you've got this nice two-wave move here, but then the upside is overall still a little bit more gradual. And then the shift in the momentum, that can easily allow this to come back and retest that low. So I think if you're looking for this as a swing trade on the short side, I would definitely keep stalking that one. All right, what else would you guys like me to look at here? NAK. Not familiar with this one. It's beautiful two-wave, nice move on the downside. This is like, if I scroll this back here, see when this has like that blow off top like that? This is a good example showing how that can turn over. So when we were talking earlier about, things trying to do a 1, 2, 3 and really get going, see how this kind of shifted here? So it went from that little phoenix after the two-wave correction, but it couldn't do the 1, 2, 3 to gain that momentum. It shifted that momentum. And that allowed this to come turn over and pull back again. So that's what we were seeing earlier. Wrong pen. Shift this back over here. So at this point, this is the type of thing where I don't like these types of setups at this point very well, because what happens is that they will have spikes and then they'll die. And it's really easy to get stuck on the wrong side of things. Overall, the base is still more bearish. Overall, this has a greater probability that it's going to creep lower. But I have seen these things come back from the dead, essentially, and they tend to repeat doing that. You can see this is done it a couple of times, but on a smaller scale. If there's nothing that has substantially changed within the fundamentals of this company, though, I wouldn't be too excited about it. So little news things aren't going to matter. It has to be a pretty major shakeup to try to get that turning around again. These kind of come into favor as like the short-term day trader type of things. So you'll see them come into play for a little bit. I can't even remember what the term is that they used to use a term for those traders back in the day, and I can't even remember what it was. But these, how this has popped up here, you can see when we were talking about an AC. Oh my gosh, Donna, good luck. You can see when we were talking about doing like that extreme second move, and then it would go for the third move, right? And then kind of die back after that. That's the same thing that can happen here. It could do like one more little push, but trying to sustain that is going to be harder. So be careful with this one. Apple, AAPL. Yeah, it does look like it's rolling over, doesn't it? So it had the megaphone, and now it's kind of going out that double length for that megaphone. So daily. As we've talked about Apple lately, it is at that extension level where, this can do that same type of thing. So it could treat this, give me my pen. There we go. This as like your first little wave. This is your second one. Kind of pull back in here, do a third, but kind of stunted, and then, longer correction there. So that's kind of what we're seeing here. It's basically at a do or die point for it to try to go again, because this is your first portion of your correction. So your time development puts this as the second portion of the correction. So if it's going to try to pop again, it would try here. Otherwise, you're going to double that out again, and then that would be another opportunity over there. General Dynamics. Wow, I haven't looked at this in a while. This used to be a favorite of mine. has gotten really volatile over the last couple of years. Let's see. Oops, I'm gonna grab the weekly. Maybe. So we've got a little bit of a momentum reversal up here. 2 waves down. It would have had the potential for a momentum reversal plus because this is like a widening range there. 2 shallower moves back up. 1 and 2. It's kind of gone past the breakdown point. You can see the time development there is basically right about there for do or die on the breakdown. So if it tries to pull up, it could actually gain momentum because it could treat it as a shallow phoenix to pop back up. Let me go back to that monthly again. Oh, yeah, the monthly has that potential to come back up. It's really at a point where I'd be looking, for a lot of more back and forth action, but the pattern that we get in here is very, very dependent again upon the smaller time frame shifts and the time development for the correction. So when it goes out a little bit too far, then it can pop it. So this, I think, could come back up into that range up there again before we get another reaction. It's going to be a trickier one. You can see that on the daily chart, there's a lot of overlap. It has like these little spike movements, but overall it can be really choppy lately. So it's not as easy of one to swing trade anymore. At least not at this level right here. And then gold. Got our miners here. So this is kind of the same idea. See how this had that correction there and then it corrected here, and if it was going to break down it would have done it here. So instead it went farther and then it was able to pop. That's just what we were talking about on GD. So same idea. Actually, let me pull that GD back up so you guys can see that. I'm going to put that on a different chart here underneath here. Move this to make that the weekly. So see, we've kind of got the same idea. I mean, the momentum's off a little bit. So for example, on the downside on GD, it's stronger. And then we've got the kind of that slower start. Whereas here, it doesn't give you that full second wave. It kind of shifts momentum there. And then does the 2 wave up. And then here's the correction. There's that point where it should have gone to the downside if it was going to go. And it went out a little bit further, and so it's popped up. And so that's what we could see happening on GD too. It's the same thing that we're getting on GDX. And again, just like I was showing on GD where it would have greater chance to increase momentum, that's exactly what's happening on GDX too. So we're seeing that playing out here. This is something that can still keep pulling. It's right at a smaller measured move, so this is a really good short-term resistance level. But longer time frames, let me go add that back. Longer time frames, we've got this kind of pulling up on the third wave here. So even though it's a strong momentum move, how far it can push past this previous high could be trickier. See, here's a really steep move, so this is slower. Faster middle move, so more likely that we'll hold that previous high and really struggle to try to push past that previous high there. All right, last one for you guys. We are going to look at SKT. This will usually keep going. So what we have here is basically a tilted 1, 2, 3 continuation. So here's our momentum reversal. Perfect 3 measured move highs, not the perfect lower channel, but it pulled back enough with the first 2 waves that it prevented it from doing a momentum reversal plus. So here we've got this to this, and so this has room then for another move down to bring it back into the zone over here. So I would still put my bet side on this on the downside. I just think as it comes into this zone over here, it's going to start to slow. So see how this one's a little bit more stunted than the first one? This is the seconds measured here. This could be a little bit more stunted again. And then we should see that widening up again down in there, but it does look like we're still going to see some more downside. All right, you guys. Well, thank you for joining me here today. I'm going to get this posted over on YouTube. We had some crazy technical difficulties last week getting started, so I don't have that one posted, but I did post the replay link in the forum for you guys that if you want to go back and rewatch that one. I didn't get it edited for YouTube or anything like that. This one I'll have up for you on YouTube for you guys. And yeah, that's it. So I'll see you back here next week. Enjoy your weekend, you guys. And for those of you in League of Traders, next week we're going to be diving into gap plays and gap strategies again. If you are not in League of Traders and you want to join or rejoin, you can get a one-time 3-month special for $150. Just go to tonihansen.com/150, and that will renew at $100 a month after that point. But you can join me for the next 3 months. So great opportunity for those of you that are not in League of Traders and would like to check it out. The rest of you already in there? I'll see you on Monday.